I'm Hanna Howard, a Gabelli Funds Research Analyst and a Portfolio Manager for LOP, which stands for Love Our Planet and People, a Gabelli actively managed ETF focused on investing in the E in ESG. I will be discussing the anti-plastics movement and the shift towards more sustainable products and packaging today. In the past 40 years, less than 10% of all plastic waste has been recycled given the very low cost of virgin materials and the inefficient and high cost to recycle most plastics. However, with increased usage of plastics globally, the properties that make the material so attractive, such as its durability, have also created significant challenges from a waste management perspective. PET bottles have low recycling rates at around 40% globally, and researchers estimate they can take over 450 years to degrade. Considering these figures, it's understandable that the majority of single-use applications typically become waste and end up in the world's oceans or landfills within a short period. The rise in plastic waste globally and its harmful effects on the environment continue to draw public attention, and consumers, brand owners, and governments are responding. Consumer momentum and the willingness to pay a premium for sustainable products and packaging is expected to continue moving forward, and we anticipate the sustainable segment of the fast-moving consumer goods industry will become a $150 billion market in 2021. In response to perceived sustainability issues with plastics, brand owners are increasingly focused on reducing the environmental impact of their products without sacrificing performance or significantly increasing costs. Both established and emerging businesses are investing in a variety of more sustainable solutions and offerings, which in general aim to either reduce the amount of virgin PET plastic utilized or improve plastics recycling downstream. Waste management strategies are moving towards recycling and recovery as opposed to disposal. Advanced plastic recycling and recovery technologies, including chemical recycling, a process that chemically reduces a polymer to its original monomer form so that it can eventually be processed and remade into new plastic materials, look to overcome the limits of traditional recycling. However, most of these efforts appear to be in the early stages and have yet to prove their ability to scale. We see a continued shift towards container and packaging options that utilize more recycled content, have higher recycling rates, and generate less waste in an effort to differentiate products as more sustainable. Efforts such as material lightweighting, increased use of recycled resins, and switching to more environmentally friendly alternatives are underway. However, low PET recycling rates have historically limited the supply of recycled resins available. The bio-based alternatives such as recycled PET, plant-based, or compostable options that are available today rarely measure up to PET in terms of performance, remain largely improvement, and are significantly more expensive to produce. Looking more closely at beverage containers today as an example, while PET bottles may still be the cheapest option available, the aluminum can is gaining momentum from these trends. The can is infinitely recyclable, has global recycling rates of over 70%, and may be collected, recycled, and back on the shelf in as little as 60 days. The global beverage can market is estimated to be around 350 billion cans today, and we forecast more than 4 to 6% growth moving forward. This is a significant increase over the 1 to 2% seen in prior historical periods. The growth to date is primarily attributable to new product launches and extensions, where cans have been the preferred packaging format. The seltzer, spiked seltzer, and ready-to-drink coffee categories are good examples. Additionally, brand owners are able to charge higher prices for specialty can sizes as compared to the standard 12-ounce can. To conclude, consumers today are increasingly concerned with the environmental impacts of their products and continue to demonstrate a willingness to pay higher prices for more sustainable options. Businesses are being held accountable for the design of their packaging, and recent bans concerning chemicals, non-renewable materials, and single-use disposables are driving changes in how everyday products are packaged and sold. Gabelli's recently launched sustainable ETF, LOP, looks at companies that are well-positioned to benefit from these trends. In appreciation for our clients, LOP will not charge investors any fees or expenses for the first $100 million invested in the fund for at least 1 year. We are happy to absorb these costs to encourage investment in the future of our planet.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.